Working Man Investor. Today's video, for the first time in nearly 30 years, central banks hold more gold than they do U.S. Treasuries. So for the first time since 1996, foreign central banks are holding more gold than they are purchasing U.S. Treasuries as the world continues to de-dollarize. Central banks have been aggressively adding gold for the past 3 years, so this is new but not brand new. They've been moving into gold for a while now, partly because our U.S. debt, our $37 trillion in debt now, it's making the world nervous. And then we're weaponizing the dollar, what you're seeing to do with Russia. Now, I don't mean that as a political comment. I'm neither for nor against us weaponizing the dollar and cutting Russia off from the dollars, and some of the other countries we've done that in the past. It makes some sense. But I just want you to understand that when other countries see the United States, the reserve currency of the world, weaponizing the dollar and cutting off access to the dollar to other countries, when almost 60% of all trades in the global economy are settled in the dollar, it does scare them. So you need to do that in only rare circumstances. This is the end result. The other central banks are seeing that, and they're starting to buy gold. Why are they buying gold? Because for as far back as history goes, you can pick up the Bible, which, as far as I know, is the oldest book in existence, and read it. You'll see gold and silver coins being used as money. Human beings have always valued gold and silver. We've always considered it valuable. So if a currency does collapse, or if you do want to de-dollarize, gold and silver are the natural go-to for that. So at the same time, the dollar reserves have been falling. As of the end of last year, dollars made up 57% of the global reserves. That is the lowest since 1994, representing a 7.3% decline. In 2002, transactions within the global economy were settled in the dollar 72% of the time. So why are countries de-dollarizing? So many countries are starting to spur the dollar. Again, it has a lot to do with us weaponizing of the dollar. It concerns them. Central banks are worried that they're going to get sanctioned, and then they want to protect themselves. So as I said earlier, what protects them from that? A large stash of gold will help protect them against that. So there's also growing concerns about our deficit. We are currently $37 trillion in debt, and there is no sign that the borrowing by our government is going to stop. So let me break that down a little bit. What we need to do, a lot of people think we need to start paying that debt off. Not necessarily. We don't have to pay $37 trillion off over the next year, 5 years, 10 years, whatever. What we need to do is bend the curve. So what do I mean by that? Every year we run a budget deficit. So when the government runs a budget deficit, the national deficit, $37 trillion, goes up. The only way the government can make money is through taxes and tariffs, which are now headed to the Supreme Court for a final decision on that. They don't produce anything. They're not a business. They're not producing products that are being sold. So when we borrow more than we take in taxes, we run a deficit. So by bend the curve, I mean we have to cut our spending, and we need to bring in enough in taxes or grow the economy enough, because a growing economy increases the tax revenue. If you're creating more jobs, you have more people working, more people paying taxes, more people feeling good, more people spending money, which then is another tax. Buying homes, that's a tax, property tax. We just need to bend it. So if, say we start running for 3 years a budget surplus of $5 billion, that will help. That will help bring investors back in our markets. So the way that we borrow money is through the sales of treasuries. We auction off treasuries, and central banks, businesses, investors within the United States, foreign investors all come to auction, and they bid on these treasuries. Treasuries are considered the safest debt there is out there, security out there, because it's guaranteed by the United States government. So when you have a lot of people bidding at auction, what it does is it drives the price of the security, the treasury, up, and the interest rate that the government has to pay down. Because you have a lot of people getting nervous and central banks switching over to gold, we're getting less bidders. So because of this, interest rates are climbing. When the interest rate climbs on the treasuries, that's our debt, and that costs more money to service the debt, meaning we start paying more in interest. We can get to the point where we're paying more in interest on our treasuries than we're bringing in taxes. If that happens, it's a disaster. So now I do want to make it clear the dollar isn't necessarily in any danger of collapsing at this time or losing its reserve status. There really isn't another currency out there that people are going to trust or want, but the dollar pretty much is the tallest midget that there is out there now. So the U.S., again, it depends on dollars to be supported as the demand for dollars to support its reserve currency status and the government's spending. So Uncle Sam can borrow, spend, and run massive deficits to an extent that it does as long as the dollar has its role as the reserve currency of the world. It creates a built-in global demand for dollars and dollar-denominated assets, such as treasuries and things like that. So the fact that people want the dollar because it can be used anywhere in the world in the global economy to settle transactions, it's in demand. That's what keeps it to have its reserve currency of the world, reserve status, because everybody wants dollars more than any other currency, because anybody will take it as payment for their goods and services. So, and again, the way we borrow is through selling treasuries. So the reserve status comes from other central banks having purchased trillions of U.S. denominated assets such as treasuries. Other central banks like this because treasuries can trade in the global economy too. It's just not dollars. So other government securities, corporate bonds, and even stocks. The dollar status as the dominant reserve currency has a critical role for the U.S., and as its dominance declines or even slows, risks pile up of our economy slowing down. So the big question that I get when I talk about this is does gold and silver belong in your portfolio? I'm not a financial advisor. I'm not giving financial advice. It's just something for you to think about. Gold is very expensive now. It's, at the time of this video, about $3,600 an ounce. So silver's around $40 an ounce. That's your better bet. I think it's a good idea to have 1 to 5% of your portfolio in gold or silver. That's provided you actually have some net worth. If you don't have any net worth, if you have a bunch of debt, then just focus on paying off your debt and getting out of debt. That's the best investment that you can make. Don't worry too much about these doomers saying that the dollar is going to lose its reserve currency status anytime and that the United States is toast. There's not another currency that can challenge us at this time. So I think what's going to happen is you're going to continue to see the amount of transactions in the global economy get cut back from 57 down to 50 and so on. And I think that you're going to central bank continue to buy gold, and wealthy investors continue to buy gold as a hedge against inflation and a way to protect their wealth. So I would watch the price of gold, watch the price of the 10-year treasury and see if that goes up or down. And just understand that treasury rates are moved by supply and demand. How many people are showing up at our auction that still want our debt? And we need to keep borrowing. That's just the state of our economy. So that's what I got for you today. Working Man Investor. Keep grinding, people.